Hi everyone, it's Thursday, December 19th. My name is Liam McMahon. I'm a currency strategist over at globalfxclub.com. Here today to talk to you about the taper. It happened, and we're going to run through what kind of price action we saw after it happened, and then we'll talk about what this may mean going forward. So we've had about 21 hours or so, 20 hours to digest the movement. So we're going to talk about it, see how we have some divergence, and then talk about what this may mean for 2014. So please take a moment to read over the risk disclaimer, which should now be on your screen, and then we'll go to the charts. All right, so let's click out here. Let's go to a 5-minute chart on Euro. Just to give you a general idea of what we saw. So this is the announcement, obviously, this area right in here. You can see that the dollar initially strengthened, then weakened, then really weakened, now it's been strengthening again. We had a very interesting candle here yesterday on Euro Dollar. All right, the high was 138.10, the low is 136.73. So we had, that's like 140 or so pip candle. So pretty significant candle, pretty bearish candle. We broke down here. The major level that had been supporting Euro Dollar, okay, was this 50 EMA here on the 4-hour chart. You can see we held it once and then twice and then even a third time here before the announcement, which pushed us up to that 138.10. So that level finally gave way yesterday. After Bernanke finished speaking, the dollar finally started to pick up a bit and we headed lower, breaking that level. Euro dollar looks good to test at least this 136.30 area. It's the 200 period EMA, and then we have this major trend line level here. So I would expect us to get there. We may see a little bit of a pop first, but am looking for further downside here in Euro Dollar. So in general, I think what it's important to look at first is just look at the dollar index. Okay, so the dollar index is higher. It's pushing into support right now. If we do manage to get through this dollar index, it's pushing into resistance right now. If we do manage to get above, say, 80, 90 or whatever, that may bode pretty well here for dollar strength. If we click over to some of the more exotic dollar pairs, this is dollar SEK. It's a very good leading indicator for dollar strength. It's testing its breakout point. Perhaps even more significant is the Norwegian one. All right, we false break below. Looks good to break 6.2, continue higher. So in general, pound dollar, all right, moving a little bit lower. Aussie holding up pretty well, actually. Kiwi, on the other hand, starting to break down. So we see some general dollar strength here, which was anticipated. Okay, so we had the taper. They tapered 10 billion for going forward, which was probably the high end of what was expected. Okay, it was either no taper, 5 billion, or 10 billion. They took 10 billion off, and the press conference slash statement seemed to suggest that they'd be willing to continue to take 10 billion off as long as the economy continued to support it. So we'll see how this plays out, but it means that the Fed will remain significant every month now. We'll be seeing if their taper is going to continue, how long we're going to postpone it. And I suppose, I mean, Bernanke even hinted that there are other tools that the Fed can use should the economy decline. So either that means that they're willing to put that 10 billion back on, or they're willing to use some of the more exotic policy tools that are in there, that remain in their toolbox. So we'll have to see exactly how that plays out. But we do have the dollar strengthening here, okay? And we also, it's worth noting, all right, so with the taper, we would expect a stronger dollar, higher yields. This is the 10-year. You can see yields. All right, so yields and bond prices inverted, so bond prices lower means yields higher. So a little bit of yield raising there. This is the 30-year, not as distinct there. But the other thing that we would have expected would have been weaker equities, and we did not get that. Okay, you can see equities did sell down briefly to test that 1760 level, and this ascending trend line dating back from the 9th or so of October, and then we rocketed higher. We're lower right now on the day, but I mean, if you look at this is the 4-hour chart of E-mini futures. If you look at the way the equities are handling themselves, right now, there's really no need for concern if you're a bear or if you're a bull. It still looks pretty healthy up here, just digesting this big candle. This major 1810 area is obviously going to be major resistance, but a break above there, I mean, seems, if not probable, certainly very possible. Watch this 1789 level for support. The other really interesting chart is the Nikkei. Okay, the Nikkei rallied up to test its previous year-to-date highs at 16,000, and it's pulled back a little bit from there, but the same thing. We didn't see any sort of major rejection candle. We're just kind of going sideways and digesting. Its major support is about 15,750 or so, and from there, it looks like we may see a move in the Nikkei to break 16,000. Should we see that, I would expect... As soon as I get it pulled up. Okay, I would expect dollar yen to continue to march higher. You can see dollar yen testing its soft resistance up here, made new highs, 104.35. Again, no rejection, just a sideways continuation. So we'll have to see. Dollar yen, not my favorite, but it does look like some of the other yen pairs. All right, pound yen consolidating after a breakout. Euro, oops, if I can type. Euro yen holding that ascending channel pretty nicely. Even CAD yen. All right, right now, again, I've been talking about CAD yen quite a bit. This little rectangle of resistance here has been very strong lately. Just selling into it and getting out on quick dips has been a pretty good strategy. But we see that these dips are growing less and less. All right, so we had the briefest dip of all last night. So it looks like even CAD yen may be starting to break this resistance zone and head up towards newer highs. So the yen pairs look good. They look a little bit more clear, I think, than some of the dollar pairs. Of the clear dollar pairs, I mean, Kiwi dollar is perhaps the most clear. That's a breakdown, looking for at least that 80 below that 81 level here, these previous lows, which has sent pound Kiwi rallying higher. Was looking for this one, did not get the pullback I needed for an entry. Euro Aussie kind of just continuing to march higher. And then pound CAD is another one worth watching. All right, possible retest higher. Dollar CAD has been really beat up lately. It's rallying pretty well well, the CAD is rallying today. Dollar CAD lower. So I mean, major support on dollar CAD 106.60 or so. All right, this one looks good for continued higher prices after we broke these previous highs. So watching dollar CAD in general, the divergence is interesting as we see the stronger dollar. We haven't seen the weaker equities yet. And we'll see for how long that divergence is continuing here into the end of the year. So we are approaching the end of the year, so it's worth remembering that liquidity will start to dry up as we approach the holidays, and so it's worth lowering your lot size or changing your targets and stops to accommodate softer volatility and less movement. So there's some interesting stuff to watch going into 2014. In general, the dollar looks good. All right, watch the dollar index here for a break. Dollar looks good. Equities look pretty good, and we'll have to see how everything plays out. The one thing that looks bad is gold. All right, so watch that 1180 level for gold. Those are the previous lows. That's the next major support level, and then we'll have to see from there. All right, so I hope that's helpful. Good luck trading the rest of the week and the rest of the year, and I look forward to speaking with you soon.